Hey, ladies and gentlemen, this is Wen giving you guys another market summary for January 27, 2011. All right, so let's take a look at the market. Let's look at the 5-day, 5-minute chart here. Yesterday was a gap up. Maybe I should just switch to SPY. That might be helpful. So yesterday was a gap up and a consolidation. Today is another consolidation on Thursday. So let's see if we could close tomorrow at this level here. You can see that we reached a new high again at the 1300 mark on the S&P. So this is the S&P right at the 1300 mark. So this is going to be very important to see how the bear is going to react to this number. Normally you want to actually short at a round number like 1300 or 1200 or 1100. Let's look at some previous examples of that. Okay, excuse me. I'll just get rid of all this. Oh. All right. See, if you look at 1100 mark, you can see that every time it touches 1100, it kind of bounces. Here's a perfect example of why 1100 is a good resistance or support zone. Once you pass this level, or you fail at this level, then there's another retracement. So that's kind of interesting. So I'm expecting some kind of I guess short-term consolidation at this level. Noticing that right now it's forming a high base. This is a high base formation. You are making new highs, and once you make new highs, you don't actually just take a dip. You actually make a consolidation pattern. So that's a very strong for a short-term bullish. Let's look at some leadership stock here today. Apple didn't really move much. Another consolidation. I'm expecting a gap fill really. I'm not sure if this bar counts, but I'm expecting to test the $350 range because that doesn't look like the end of a run really. Let's look at Goldman. Goldman's a good one. I like Goldman. Goldman's always one of those that leads the market. Today is up actually by 1.69%. I'm not sure where this is going because there's just a lot of gaps and it's kind of confusing, and the daily chart is kind of messy as well. There's all kinds of weird stuff, so I'm not a big fan of trading gaps really. Okay, let's look at some Google. Google's a good one. Google, high technology. I like technology stocks. If you guys haven't realized, because I am a technology savvy person, Google's not. It's completely flat. Let's look at oil. Oil went down today. Actually, you can look at oil. Went down 2.51%. Crude oil futures is down, and gold going down. If you guys notice, there is a huge. Okay, this is long term. These are long term trend lines. Don't worry about that. Oh. I drew a trend line by accident. You can see that there's resistance right here. I'm just gonna draw it real quick. It closed right here. This is very dangerous. This is very dangerous for gold. In fact, if this gold closed on a weekly basis below $130, GLD 130, roughly $130. What is gold at GC? 130, $1,300, yeah, dollars. I might short it, because this is on huge volume and it's breaking this support. Look how many times this support bounced. 1, 2, almost there. 3, 4. The 5th time it broke on huge volume. So this is a very bad sign for gold, meaning that it'll probably drop to first is $122 and then $115. Who knows where it's gonna go really? But it is, I believe, above the 200-day moving average is 125. So that's gonna be the first level to hit really. There's nothing stopping from here to here. It's free money. Okay, so gold. That's about for gold. If you want to look at bonds, bonds not moving really. It's not going anywhere. It's consolidating. It could just maybe test this area or go up. I have no idea where this is going. There is a trend line though if you want to draw it like that. So maybe if it breaks out off this trend line, then we'll see more of that really. The dollar, I think it's gonna test the old. Excuse me. Excuse me. I got a text message. It's gonna test the old low here at any of these levels really. I'm just gonna test it. Maybe I'll have a double dip, boom, boom, and then go back up. Or maybe if you start seeing gold rallies and crude oil going up, then you might see a devaluation of the U.S. dollar, which means that it'll break these trend lines and go down to somewhere that we don't want to. Another thing I want to talk about is the Russell. Russell is really interesting today. Despite the fact that nothing closed anywhere really except the Nasdaq, which is kind of good. The Russells, you can see that yesterday. Let's look at the 20-day. Yesterday, Russells, you can see taking a huge leap here and making new highs as everyone's staying just kind of where they are. But Russell is actually leading the market in the last couple of days. This is a very good sign because the small caps usually leads the large caps. They always go first, and then they always fall first. So that's a very good amount of relative strength compared to the rest of the market for the last 2 days. So I'm expecting more bullish action tomorrow at least. After tomorrow, it's almost at the end of the month, and it's questionable whether where we're gonna close. I'm thinking right at the 1300 level. That's what I'm expecting. So it's gonna probably shoot up, consolidate a little bit, and then on Tuesday I'll probably crash back down to 1300, close there, and then this is obviously bullish. Follow the trend. Trend is your friend. So don't try to short it. Wait for the opportunity. Wait for some kind of formation pattern to form. Wait for this kind of diamond formation to form. Short it at this level. There's plenty of opportunities. No need to be so quick about it, trying to catch the top. So that's about it, folks. Subscribe to our channel. If you have any questions, leave a comment below on what you think of this analysis. Thanks.